What is up, everybody? Happy Friday. It's Jen and Adam back with another market update. Adam, the big news, the big headline this week for housing, as for the 10th time this year, we have hit a historic low on interest rates. According to Freddie Mac, their 10th historic low this week, the average on a 30-year fixed rate mortgage at 2.81%. That's crazy.
I think, at this point, we just are expecting it now, Jen, that we're going to keep seeing these lows. But just rewind the clock, gang, like a year ago, and we didn't see this coming. I was with a friend last night. We were watching the baseball playoffs, and he said, "Hey, I'm thinking about a refi. Should I wait, or is it going to go lower?" And I was like, "Dude, 10 times this year we've hit a new record all-time low on that Freddie Mac survey. So, yes, it could go lower, but if you're sitting on the sideline right now, you should at least be having a conversation with a loan officer about where your mortgage is, where it could be with these low rates, how much you could be saving if you're in the purchase market to lock in now versus at a higher interest rate later. So now's the time to have those conversations. And Jen, there are other metrics we need to be watching because we know these interest rates move up and down with the overall economy. So what are some of the other things that you were watching this week?
Right. Like inside the market update, you'll find all these details. The market is super volatile. October is typically volatile, right? And the trend has shown October is a fairly volatile
Actually,
month.
an election year.
Yes, especially when we're 3 weeks away from the presidential election, right? But also there are a couple headwinds, the stimulus plans, right? So House Democrats and Republicans are still battling over any sort of federal stimulus money, and investors are weighing that against the fact that there's also an increase in COVID-19 outbreaks in Europe right now. So those are a couple headwinds against the market. But the market did tick up on Friday morning because retail sales were way better than expected. So consumers spent a lot of money in September, and that is the biggest portion of the economy, right? When consumers are spending money, that means they have money to spend. That means they are employed, which is good. On the flip side, unemployment numbers still pretty dismal. They've actually gone up the last couple of weeks for the first time, I think, since August. So that's really kind of tricky. And also continuing claims, and we look at long-term unemployment. So there are a lot of factors going on. Overall, a slow economic recovery is what everybody is pointing to. So that will affect the markets. And at some point, it might affect housing. So just keep all that in mind, read up on all the details. But if you are able right now, like Adam mentioned, you're able in a good spot, call a movement loan officer and see what your options are, because these rates are pretty crazy, Adam.
Yeah, this is a lot to keep up with, gang. We know it's a lot of moving parts. October is a volatile month, but we try to take care of it for you in the Market Update blog every week. You can read more about it at movement.com/blog, and your local movement loan officer would be happy to answer any of your questions.